Ladies and gentlemen, distinguished guests, welcome to the third and final day of Sharm Rendezvous, hosted by Insurance Federation of Egypt and held under the patronage of His Excellency, the Prime Minister of Egypt. Let me take you first over the day's program. We have two sessions scheduled today. So the first one is on international insurance trends and best practices, and the second session will be on customers' needs and what's the most important challenges. There will be a coffee break, of course, in between. As for lunch, it will be held at 3 p.m., just like yesterday, at the Soho Square inside the tent. And I remind you that tonight we have the gala dinner at Trixis, and it will be featuring the superstar, the Lebanese superstar, Nawal al-Zoghbi, and you're all invited, of course, to join this party. Let us start the session on best practices and the most modern practices in the global industry. Insurance industry have proven effectiveness for a wide range of insurance providers across sectors, regardless of product mix or market. Insurers in every stage of maturity can benefit from solutions designed to maximize growth, create effective strategies, and enable benchmarking and forecasting. With the international insurance industry, new tools, technologies, and behaviors coming on fast, best ideas about what works best are failing fast and need constant updating. Let me introduce the panelists for this session. The moderator will be Mr. Mahmoud Aqoub, Managing Director, Hanover Tekaful, General Manager, Bahrain Branch. Please join us on stage. As for the panelists, Hadi Hashisha, CUO, Head of Africa, Near and Middle East, SCORE Global PNC. Mr. Kamal Tabaja, Group Chief Operating Officer, Trust Tree, Bahrain. Mr. Peter England, Senior Head of Commercial Insurance, Middle East, Zurich Insurance Company. Mr. Salvatore Orlando, Head of Region, Mayor, Partner Re, Zurich Branch, Switzerland. And Mr. Khaled Al-Sayed, CEO of Apex Insurance Egypt.
Bismillah ar-Rahman ar-Rahim. Assalamu alaikum. Good morning. Sabah khair. And bonjour. Indeed, it is a pleasure for me and the panelists to be invited by the Insurance Federation of Egypt and also Al-Azawari for this invitation. Thank you very much. And so far, it's excellent. And we really think it's an excellent job. And once again, congratulations to that. Well, this morning we have a variety of subjects from an international perspective, and they range from insurance and technology, mergers and acquisitions, microinsurance, reinsurance, and international program business. So as you can see, it's a mixture of international issues which has an impact on the local market as well, or the regional market rather. So, without further ado, I would like to briefly introduce our panel this morning. And I will start with Hadi Hashisha, who is right in the middle there. Hadi joined SCORE Global PNC in 2001 as head of the industrial risk within the Worldwide Integrated Group division. In 2007, he became head of strategy and development by the end of 2010. He was appointed Chief Underwriting Officer for Middle East and Africa. On the side note, a very formidable competitor for us, so we like him. What is he going to talk about? Sorry, let me just get my notes. It is going to talk about a number of issues related to the reinsurance world, in particular natural catastrophes, man-made disasters, and the elephant in the room, what's going to happen at particularly renewal January 19. I think you can push him on that, and let's see what he has to say on that. Eddie, but you can't leave without me throwing a curveball at you. So whilst I'm speaking, you can start to prepare. And the question that I'm going to pose to you now, but we can discuss it during our interactive session. And the question is, reinsurers are facing headwinds such as intense competition, earnings under pressure, and excess capacity. How do you see it in the next 12 months? Secondly, we have Kamal Tepaja, Group Chief Operating Officer, Trustee Bahrain. Kamal is a compatriot of mine in Bahrain, so we know each other very well. Started his career as a fiber optical systems design engineer at Nortel Networks in Canada. That I didn't know, I can assure you. Kamal began his reinsurance career with Trustee in 2002 within the Treaty Department, and in 2013 was promoted to the Group Chief Underwriter, to be followed in 2014 as the Group Chief Operating Officer. Kamal will talk to us about microinsurance. This is a subject which is, I think, close to all our hearts, and in fact, we really cannot grapple with this subject, and I think there's a lot to be done, but we're going to hear a lot more about him. The insurance culture is the question to you, Kamal, after we've discussed a number of issues, is an insurance culture is a prerequisite for the success of microinsurance. However, consumer perception towards insurance may also not be at the desired levels. Therefore, how do we close the confidence gap? We then move on to Peter Englund, Senior Head of Commercial Insurance, Middle East at Zurich Insurance. Peter was Chief Executive Officer, Global Corporates in the Middle East, in the Middle East for Zurich Insurance. Since 2016, Peter held various senior roles in Denmark, Middle East, Russia, as well as a regional role overseeing the Nordic countries. Most recently, he was the branch manager of Zurich's global corporate business in Denmark. From Peter, we will hear about international program business. And Peter, whilst I'm speaking, you can think about the question that I would ask you to focus on, and naturally we can all interact on that subject, and it is, how do we enhance the role of local insurers on international global programs? We then have Mr. Salvatore Orlando, Head of Regional MEAR at Partner Re Zurich branch. He was the head of high growth markets, Middle East, Latin America until 2016, and now he's taken on the head of region MEAR. What is Salvatore going to talk to us about? Let me just check. Mergers and acquisitions. I think this has been a hot subject of late. Every day when you get up in the morning and you see Insurance Insider, somebody is in the merger process or takeovers. So this is quite an interesting subject that we're going to discuss this morning. However, having said that, Salvatore, we read that S&P does not think that the merger and acquisitions is a solution for the challenges faced by the reinsurers. They have a neutral view of such deals due to the risks they pose and the lack of uncertainty the mergers and acquisitions actually, or whether they actually help the participants in achieving anything other than prolonging or temporarily staving off their difficulties. That's a long shot, and so we'd like to hear whether you agree, disagree, or you're neutral on the view of S&P on mergers and acquisitions, in particular relating to the reinsurance world. And then we have Mr. Khalid Said. Please give me a moment. I have to open my phone on this one, and I'll explain why. We were meant to have Zuhair Al-Toot, Chief Executive of Apex. Unfortunately, he had to be called away, and Khalid Sayed has thankfully taken and bridged the gap on this one. Khalid has 29 years of international and regional experience in the field of insurance and reinsurance across the Middle East and Africa, having held several positions in the broking world, insurance and reinsurance world. He comes with a wealth of experience, and we are happy, Khalid, that you took over that position to help us out this morning, and we certainly are looking forward to see what you have to say. What are you going to talk about, Khalid? Let me check again. Yes. I have to find it. Should be here somewhere. Insurance. Somebody's going to help me on this one. Let me see. Insurance and technology. That's what Khalid is going to talk about. And of course, this is a hot topic for all of us. How do we go with apps and instruments and the blockchain, etc. So we'd like to hear from Khalid as well. So for Khalid, the question that I would like to pose to him is, will changes like digitalization and automation constitute a threat to traditional brokers or simply an opportunity to better service and clients? We heard a little bit about that at yesterday's session, but perhaps we'd like to look at it from a more wider perspective. Without further ado, we will now open the discussions, firstly with a few introductory comments from our panel, and thereafter we would go into an interactive discussions, and I would like to see audience participation as well, so that we can really get best value out of this subject, and I think it's an important one for all of us. Thank you very much. Thank you. Okay, let's see, how do we do it? We can do it from that end or that end. Who's ready? Okay. Peter, go ahead.
So, thanks for that. And let me first start by saying good morning to everyone. It's absolutely great to be back here in Sharm el-Sheikh, and it's also great to speak in front of so many colleagues and friends in the audience. To answer the question about best practices and international programs and trends, I think we first need to study where a trend starts. And because what I can see is in Europe, for example, is a development that started, say, back in 2001. What I'm referring to is a known legal case, I think it's known to most of you, called the Kroner case, involving a Norwegian contractor and their international program, or the fact that they tried to cover global exposures out of a master policy issued in Oslo or in Norway, and where the issue was raised was regarding the Dutch exposure. And I'm not trying to become I'm not getting too technical, but I'm going to show you sort of a real life example and what kind of a development it could lead to. The master policy tried to cover on a non-admitted basis into Netherlands some of Kroner's subsidiaries. They did so, but they never paid premium tax in the Netherlands, and the question was then whether this policy is enforceable effectively in Holland. The ruling from the European Committee said that it's not enforceable. So, in other words, when you have a global program, it's important that you allocate the premium properly, but also obviously that you pay tax where you need to do so. I'm mentioning this because I believe that this led to a development when it comes to international programs, and we then saw the growth of global carriers marketing their abilities, saying that they could effectively cover up to 200 territories across the world, and they could do so in a legally sort of fully compliant way, effectively issue local paper where they needed to, and also pay tax. And when we then look to our region, because I'm not gonna take too much time initially, but if we look at our region, we say, what can we learn from this? I think what we need to recognize that also here in the Middle East and in Egypt, our clients become even more sophisticated, and also they have a growing global exposures. So I think what we can learn is then we need to gain presence in many of these countries across the world. We need to see if we can partner with companies to be able to serve our clients to make sure that they are fully compliant, that they are not subject to fines or anything like that in any countries. And coming back to technology and trends, I think also this is where we see a huge development right now, because I think, yes, we can develop as international program carriers across the Middle East and Africa, but also the way we manage these programs with artificial intelligence and things like blockchain technology, ensuring that the master contract is mirrored one by one with the local policy, has become increasingly important. So I think that's my initial perspective. I'm gonna leave it at that, and I will welcome further discussions and questions later on. Thank you.
Peter, thank you. Okay, Kamal, would you like to give us some opening observations on the subject you have chosen, and then we'll go through other issues as well. Thank you.
Normally, I don't need a microphone, but I'll start. Thank you very much. It's a pleasure to be here with everyone, and for all the support that's been given to the company as trustee in the past few months. I think microinsurance is a big subject. As Mr. Muhammad Aqoub alluded to, it's a subject that everybody is grappling with for a long time. Maybe a good start would be to maybe define microinsurance, because there's a lot of definitions that go along with it. From my perspective, microinsurance is a relative subject to the territory, to the region, even to the product or the segment of the population that we are trying to target here. So I don't think there's a flat definition on microinsurance of the size of the product or the limits or the segment we're trying to target. And a pure example of this, it's quite relative to what the population can actually spend to the segment that we are trying to target. Somebody paying $100 of annual premium in a place like in Southeast Asia, for example, where the average earning per day is $1 or $2 a day in terms of wage, is quite significant compared to somebody that earns maybe $10 a day in a different region. And hence the spending power of that segment of the population, or that most of the insurance industry is trying to target, makes it different in terms of defining what a microinsurance would be. And we have to be honest as well with ourselves. We, especially in a lot of the emerging markets, we are still behind the curve, starting from regulations in terms of finding ways to assist the insurance and insurance industry in penetrating such a segment. I think some of the numbers yesterday that were talked about the local Egyptian market, if we look at just the pure traditional insurance, it's still relatively small. And if you talk about penetrating the lower end of the population or the bottom end of the pyramid, I think it becomes even more difficult in trying to achieve and target that segment of the population. Regulators, I think, have a big role to play into trying to help out the local insurance community because they have the ability to work with the different governmental bodies, whether it's, we talk about farming industry, we talk about people that are uninsured today. There's a lot of people are still unbanked as well. They don't even have banking accounts, the ability to buy this product as well. So regulators have a big role to play in it, as well as national government organizations and bodies to assist in the progress of microinsurance. And in reality, I think any product that we put out as an insurance and reinsurance industry has to add a value. And when we talk about microinsurance specifically, it has to have an economic value. While in traditional insurance and basically focusing on the top end of the pyramid in terms of the segments that the insurance industry normally targets, we see is more specific, more individual, more focused on, say, industrial business or commercial business. When we talk about microinsurance, we're talking a large segment of the population that is in need of the insurance, and in case of any disaster or catastrophic disaster that would happen, that's where the most of the economic loss is. And I think microinsurance is there to target and bridge, lower that economic damage to any economy, whether it be in Egypt or in Philippines or Indonesia. And we see that whenever there's a cat event, actually the insurable size of the event is probably just a percentage of what the actual economic damage that is being sustained by those countries. And then we look at the mechanisms, and I think this has been the fight and the struggle of many insurance companies or governments in trying to create value out of microinsurance, which could be health, could be cat protection, could be agriculture for farming industries, it could be life insurance, educational insurance for people. And the struggle has always been around two key areas: distribution and the ability to collect, as well as pay the claims on time. I think this has been the most struggle for a lot of the insurance companies. Insurance companies, until today, taking technology out of the picture, I think they will struggle to be able to create microinsurance products and distribute it at large, because you need volume, you need real aggregation of different segments of population or industries on the microinsurance side to be able to make it cost effective. And this is what the insurance companies today will have a struggle in being able to afford it. The marketing cost, the administration cost, the ability to reach out at mass. So you cannot go sell out this product and assume that 1 out of 10 people of a certain segment would actually buy this product. You need a lot more than that to be able to make any cost-effective product. And that's where, if you look at Southeast Asia and sub-Indian continent countries, at the end they got to the conclusion and to being convinced that we need government intervention, is to come in alongside the insurance companies, alongside the reinsurance companies, to be able to penetrate that market. We've seen massive growth in India on the agriculture side of the business, for example, from nearly 500 million or 450 million 5 or 6 years back to approximately $4.5 billion of top line income. That's only in India. We look at Philippines, for example, some of the schemes that are done against flooding, against cat or windstorms, etc., where people would buy and pay $30 or $40 a year to protect them in case of loss of property and contents. And again, this is where the government came in and have been able to distribute these schemes through municipalities, through NGOs, possibly through United Nations, helping bodies in different areas. And that is what is needed. If we look at Egypt here as well, any insurance company present here is going to have a hard time in trying to get to the different regions, educate people about it, because that's quite important. Mutual funds have been very successful at this in certain parts of the world, where in certain areas or territories you've got people coming together, establishing mutuals, trying to go door to door and educating people about the product, whether it's a farming product, whether it's a cat product, and that helps. However, even mutuals have to be regulated. There has to be a regulation around them where people would trust such a fund or a mutual fund or a mutual organization, because at the end, whether we like it or we don't like it, not a lot of people like insurers. They see it as a tax, they see it as a way of, they see, in a lot of places, bad service coming out of it, and they don't see the necessity of going to an insurer to buy such products. And that's where technology actually starts coming in these days, is we're getting into a technology era, is that there are multiple tools of becoming enablers for such challenges that we are having on the mechanisms or we have it on the product cycle. And we look at, for example, distribution through mobile telecommunication companies, as we see in Pakistan. It has grown massively in the past 5 to 6 years, as well in Southeast Asia. We look at as well blockchain technology today, which can provide different factors and edge. I'll leave it to Khaled, maybe he'll speak more about it. But moving from a smart contract to tokenization of the product itself, to the claims ability to pay in a quick manner. And that's what really needs to be the two important factors of any microinsurance outlook, or three factors actually. Regulatory adoption along with government support. I think that's essential, and that will help to curve out a lot of the cost and the distribution effort that any insurance company would have to do. Second is the ability to sell the product from A to Z without having multiple intermediaries be involved, because as we add more layers into this product, it becomes kind of expensive to the end client as well to the insurance companies to manage. And third is the service. You cannot assume somebody, a small farmer or a person living remotely, when he has a claim or she has a claim, that it will take them weeks to get paid for a small amount, which probably would be negligible in around $500 or $1,000 or $2,000. It has to be prompt. It has to be without many questions. And the product, that's how it has to be designed. Service and claims payment, and I think that's where technology comes in, where we would have instant payments and instant collections at the same time. I think that's my 2 cents on the subject. And
Thank you, Kamal. We now move on to Salvatore. Salvatore, your opening remarks on the current hot topic of mergers and acquisitions.
Good. Okay. First of all, I would like to welcome as well. It's a great pleasure to be here, and of course, I would like as well to thank the organizer for this, for the organization, and of course for the invitation as such. My role here is to talk about M&A. I think it's a very fashionable item over the last couple of years, and has been driven due to the fact of a very favorable economical landscape, particularly due to very low interest rates. Over the last couple of years, we had more than 550 billion US dollars coming into M&As in the insurance and reinsurance field, driven by the fact, of course, that the money was extremely cheap. And if you can borrow money with 1% or even below, and expect a return of about 8% average. That's what, in reinsurance at the moment is average expectation of return on capital, then of course investors think it's a good business, and therefore they are going after M&As. But there are also other reasons why M&As have been so fashionable over the last couple of years. Particularly, capital management has played a very important role. I think there is no doubt that our industry is in a transformation period. It means automatically that the difference or the border between insurance companies, reinsurance and capital market is more and more disappearing, and the driver is cost of capital. Capital is the name of the game. As cheaper as you can provide and more competitive as it is, there the client will go and will buy then afterwards automatically the product. So in the future, of course, our competitors is not anymore, a reinsurance company, but it's going to be a capital market. It's going to be the pension fund. It's going to be hedge funds, etc., etc. So we are going to compete with, let's say, much larger capital provider, and therefore also for us, reinsurer, insurer, etc., there is need to increase capital base as such. Additionally, of course, you have to look at the region here. More and more, also insurance companies, our clients, are becoming stronger. Their balance sheet has been increased now over the last couple of years due to different reasons. And therefore, they are looking to us as a reinsurer, and they want to see a strong balance sheet. And it's my, let's say, firm belief that the company or reinsurance companies with capital base below 5 billion in a couple of years are going to be extremely difficult to remain competitive. But there are also other reasons why, of course, M&A have been so flourishing over the last couple of years. One is, of course, with M&As, you have the ability to buy, let's say, new services or to enter into new geographical regions. So if you are not present in a specific region, automatically you can buy another company which is relevant in this area. Another important point for M&As is if you want to change, for example, culture. And there has been a very prominent case. Ace buys Chop, but the name of the company remains Chop. Why? Because there has been a clear message from the board and from the management that the culture that the new company wanted to keep is the one of Chop. And so from that point of view, of course, it has been, it is important as well to analyze before you enter into M&A discussion the culture of two different companies. It can be a success or it can be a failure. So from that point of view, it is extremely important to analyze the overall situation. There is a statistic from Deloitte who shows that about 70% of M&As are not going to be successful. So they are failing. And they are failing mainly due to one major reason, and that's execution. Because most of the time, people are, let's say, failing in defining a proper strategy and execution as such. Another reason why, of course, to enter into M&As are to acquiring skills. Skills, which means that most of the time when we talk today skills, it's people, but as well technology. IT is going to play a very important role going forward, and many companies, of course, are analyzing situation and are, let's say, entering into discussion on an M&A basis, but as well, and more, this is becoming fashionable as well, on partnership. Meaning you are entering into a partnership relationship First, to check if it works, if you have the possibility, of course, to adapt new technology that is important to enter into specific segments, and then, of course, to make the second step and to enter then afterwards to buy the company as such. I think over the next couple of years we are going to see, we will continue to see M&As because the market is evolving, and it's getting more and more important, of course, to have also scale. Scale is important due to the fact that technology will reduce our margins. And less margins you have, economy of scale is going to be important. Now, is it the only way to survive? No, it's not. I think there will be always room for specialized companies. There will be always room for smaller companies, but those companies, they have to be different. They cannot just adapt the same strategy as the large one. I think with that, I hand over to the next speaker.
Salvatore, thank you very much. I think you have brought up some interesting, wide and varied concepts to the issue of M&As, and we'll certainly discuss that further. We now come to Hadi on the issue of reinsurance.
Thank you, Mohammed. Good morning, everyone. I'm very pleased to be here and to discuss and present my point of view on where we stand on the reinsurance side and how do we see the market itself. I think the question is that one. You mentioned the word headwinds. There are many headwinds. The first one, and that has been here for a while now, and that has followed the financial crisis, relates to the low interest rates. That has definitively put pressure on the business model of reinsurers in reducing the investment income at a level where we need definitively to grab more technical profits. At the same time, we also, faced political headwinds that are coming in the different forms, depending on the region. Maybe the first one is the populism that has started almost everywhere, and a response also to the globalization with the creation of more barriers that are somehow constraining an industry that is based on free trade and total free trade, because diversification is a key element for this industry. The other aspect which we also see in this region is, we had events like revolutions, we had also protests, contestations, riots, instability. All that has put, pressure. All that also has resulted in shaken economies in our region, and that joins also the macroeconomic aspect, in the sense that devaluation in the emerging world, but also in our region, fortunately, has been an element with the inflation, which is something quite connected. The third aspect, obviously, is the fact that in the last years, there has been an erosion of rates that is due essentially to the fact that the supply of reinsurance has increased more faster than the demand. And we reached, a point where definitively rates, had successive years of reductions. And if you take the period 2011 to 2017, we had 6 years of consecutive rate reductions that have, put pressure on the technical profitability of the reinsurance sector. If you compare, for instance, and those are elements that are quite interesting, but maybe before I would like also to speak about the contestability of the alternative capital that has entered the sector, and today that represents 15% of the reinsurance supply. So that has, again, created or stimulated the market on certain very specific modeled risks, such as NatCat, in certain territories, in America, etc. But that has also an implication resulting into fiercer competition everywhere, is the fact that, for instance, if you do CAT US and you are contested by sidecars or other form of alternative capital, indeed you need to recapture a premium income elsewhere around the globe, and maybe you come in a region which is Middle East and Africa and you would like to diversify and offset the lost premium in mature economies just by gaining market position here. So all those elements have resulted into, technical profitability far below the level it had 10 years ago. And just to give you a couple of elements, there are many studies on this provided by brokers and that are quite good, or by rating agencies. They show essentially that in the last 5 years, the return on equity, the reported return on equity, went down from 12 to 7% in 2016, and now we are probably at the end of the first half of 2018. We reached a low point. We are just below 7%. At the same time, if you exclude the exceptional effects of reserve releases and other one-off effects, you would find that the normalized return on equity went down from a region that was 8 to 9% to something close to 3% or just above 3%. It means today, and this is also a study done by one broker, that shows that our industry these days, is showing return, on equity, reported return on equity with reserve releases that is just at the level of its cost of capital. Though the industry is really under stress and the situation is quite fragile, and that's why the reinsurance trends are quite complicated, and to predict and respond to the question of Mohammed, it is quite difficult. Obviously, in 2017, we had major catastrophes, which recently increased. Those catastrophes represented 140 billion US dollar. That's an amount that is incredibly high. Before, when we were, in a market quite simple, when you had big events, you had an upturn of the market with a radical change of the pricing trend. What we noticed after these catastrophes, we noticed, yes, we got an increase of prices. Ourselves, we reported in January 2018, 3.3% rate increase in average on all our renewals. That's good. That has resulted in a projected combined ratio improving, but that's not the situation we were recording before. 10 years ago, cycles were more pronounced and they were quite clear. And in that sense, the contestability of alternative capital as well as the excess supplies have played a role. And what we have seen since the beginning of 2018 is a slow erosion of rate increases. And today, all the comments in the various conferences, and I'm sure here you have read those, they report more or less a stable situation, but by definition, stability is very unstable status. Stability is not something, you get easily. Stability of supply and demand, because at the end we are in a market governed by supply and demand, is something that is not always achievable, and sometimes it's very fragile, so it can go in one direction or it can go in another direction. So my prediction indeed is, I'm going to go with all the observers and all the comments, is stability, but stability to which extent? Then if I look, more specifically to our region, first of all, in the recent months, we recorded some increases ourselves also that were more related to certain territories compared to others where catastrophes have happened, like South Africa, for instance, or other territories. We had some events also in UAE, not very far from here, man-made or catastrophes, and those created some reaction from the industry, and the industry, has put more pressure on the terms and conditions it set. But it's very difficult today to predict where we're heading to in the region, in the sense that also there are very specific situation with the with the supply of capacity in the region. That is essentially my introduction. I think also, speaking about M&A, M&A is a form of response to this environment that is quite challenging for our industry.
Hadi, thank you very much for those opening remarks on the overall state of the reinsurance market and some allied issues related to that. We now come to Khalid, who will tell us about a very important subject, and that is technology and innovation.
Good morning, everybody. I would like first to thank the Egyptian Insurance Federation for initiating this valuable event and for perfectly choosing the topic of this event, actually. I believe so, in my opinion. I'm going to talk about how technology reshaped how insurance is done and how underwriting is processed and how claims also are processed. There are a number of new technologies which I believe all of us are aware of it. For example, drones, artificial intelligence, blockchains. There are many actually that has appeared in the recent few years. It has actually affected how business is underwritten, how claims are managed. I will give some example of each one of them and also product development. In terms of how business is underwritten, we have seen that something like wearables, for example, are used in health insurance side. They give the insurer some information about maybe the heart rate, beat rate of the insured, how his activity, how his lifestyle, for example. It can also be used in many other things. We have seen telematics in car insurance, where it gives the insurance company detailed information, analytical information about the behavior of the driver. This has material impact actually on how insurance company can analyze the business and underwrite it. We have also seen some other technologies like for home insurance, for example. We have seen smart bill doors, for example, which can be used in watching the risk itself, where you are outside your home country even, and you can have access to it through your mobile phone. This is actually done through the Internet of Things. Internet of Things is a number of devices which are connected to each other through the Internet. This has really material impact on how business underwritten nowadays. Also, there is another technology which is called ADT Pulse. This is for home security also. It can detect whether you have leakage in your water pipes in your home, and you can even shut it off remotely through your mobile phone. This is a very advanced technology. Of course, the role of these technologies on claims control and on loss minimization side is obvious. An example of the door build, for example, it has substantially reduced break-ins into houses in the UK and the US as well. Another example of claims mitigation actually is what is called remote sensing technology. And actually Egypt was pioneer in this area. Some of us may recall in the 90s, there was a number of very large claims on the energy side. It was actually collision claims, vessels crossing the Gulf of Suez. A number of them has actually hit energy installation, and some people like in my age, they still remember these claims. They were as large as maybe 300 million US. Actually, the Egyptian government took initiative to install a remote sensing solution in the Gulf of Suez, a number of spots. The cost at that time was something like 50 million US. I still remember the figure. And after that, these claims actually, after installing these sensors in a number of spots in the Gulf of Suez, these claims are now something of the past. And this is really an obvious example on the role of technology in minimizing claims. Actually, I remember that at that time we achieved a lot of saving on our treaty. Although our treaty at that time, I was representing Egypt at that time, and our treaty was actually not doing well. However, we managed to convince the reinsurer to give us a lot of financial benefits just because we highlighted this kind of technology and we proven to them that it is already implemented. This is actually, and you can see an obvious example for this. Actually, also on the product development side, there are a lot of areas which can help. Something like on-demand user-based platforms, personalizing underwriting based on your own profile and your exposure to the pool. Something like peer-to-peer digital platform, and also user-based and on-demand insurance. Insurance management platforms, digital platform also, are very useful now, and it is already used in the market. Actually, that is from my side. I would like to thank you really for listening. Thank you very much. Thanks a lot. Thank you.
Thank you very much, Khalid. Clearly, you are telling us that the Internet of Things is the future, and we certainly absolutely believe, but we need a lot more to be done, and we will discuss that. We now come to the interactive stage of our panel discussion, and we're going to allow it to flow and discuss various issues. There's been many items which have been discussed so far. Peter talking about the enforceability of various legal jurisdictions, Kamal talking about the accessibility to obtain, let's say, premiums and the distribution. Salvatore gave us some intuitive issues about mergers and acquisitions and the fact that money is cheap or money was cheap, that increased the availability or the propensity to increase mergers and acquisitions. Hadi outlined the headwinds that are facing the insurance and reinsurance industry, with particularly to reinsurance pricing, and then the Internet of Things and how we should embrace technology. So what I would suggest is that we challenge one of the questions that I raised earlier, and we would ask our panelists to interact on that. And it is an issue which I hear a lot about, is the role of local insurers on international global programs. If I'm honest, this subject comes up in various regions with the feeling that at the regional level or at the country level, local insurers are not getting a slice of the pie. And how can we do that to ensure that there is skin in the game, so to speak, for that type of business, and not leave the local insurers only with the small and medium-sized business? It's a question, and I think we need to address it and see how best we challenge this issue. If you go to various regulatory environments, this is a subject on top of their list as well, and it's better that we discuss that. Thank you.
Can I just as a, let's say, a starting point, I have heard a lot about technology over the last couple of days, and there is no doubt that technology is important and is going to be important. But I do also believe that, in many, many countries, it is fashionable to talk about new products and new technology, but what we are really doing is very, very low. And I make you an example so that you understand what I mean. In Switzerland, everybody could at least have a discount of their policy of about 30–40%. You just have to understand one thing. AXA and Zurich, and he can confirm this, but it's in the balance sheet. Their annual profit is about 30% of AXA's annual profit a year comes out of Switzerland. Now, automatically, it would have been easy, you know, that with all this app, all this technology, everything new, that a market like Switzerland would have been attacked. And they tried. They tried to enter into the Swiss market as such. Result, very, very minimal. People like to stay with their agent. My generation still is tied to agent and to broker because they like the service. It will change. My kids, they will probably think differently. But for the time being, and I don't think it's going to change for the next 5 to 10 years, this is not going to change. And therefore, I would like to highlight and to point out one thing. We have so many problems in our industry. Let's start to solve this one before we start to talk about new products or new, let's say, technology will change the world. It will happen anyway, you have to prepare, it is absolutely correct, but let's focus first on the problem that we have day per day.
Thank you, Salvatore. Can I ask for some, Harry? Yes, go ahead, of course. Okay, the two hands up. Okay. Peter, you go first, and then Harry. Okay.
Is this on? Can I just come back to your initial questions about the premium allocation, about local insurance companies here and the participation in international programs? I think it's a fair concern, and I think what we have to note that it also starts in the producing country with how we allocate the premium in the first place, right? I think the initial guideline, it has to be a fair and reasonable allocation. Is often based on turnover or employee or assets, but that's where it starts. So in other words, we have to note that some of the countries in the Middle East may, in some instances, be subject to a minor exposure in the international program. And we just need to make sure in the first place that there is regulation in place to make sure that this allocation is done fair and reasonable. In other words, that there's a fair chunk of premium allocated locally to the Middle East and the Middle Eastern countries, and that's where we will start, and that's where we can then discuss what the fee arrangement will be on the local side. Just one point, if I may, as well, coming back to the discussion about technology and acquisitions. I think it's fair to note that we've seen, as we've mentioned, quite a number of high-level acquisitions out there, but we also see a lot of acquisitions in the tech space, and we see our industry with a growing interest as well into the likes of Silicon Valley. And I think that's something that we will see, and that's something that we will see continue. Also on the topic of rates, and we keep mentioning this discussion about alternative capital. And I guess the question is potentially in the room, what exactly are we talking about, and why on earth is this capital coming to our industry when the industry, one may argue, is not in some instances not performing? What I'm referring to is, for instance, a year like 2017. When we saw Harvey, Irva, and Nate in North America. We saw effectively many of these events absorbed a lot of capital from the, say, look at the availability of reinsurance capital, pulled out a lot of available reinsurance capital. And what happened to renewal? What happened to the available capital the year after in 2018? I mean, my intuition would tell me that that would decrease, right? If a year in terms of in times of non-performance, clearly capital would sort of move out. But that's not what we see. And as was mentioned here, one of the explanations is the influx of alternative capital, effectively hedge funds, other financial institutions having a go at our industry. And the reason for this, and this is my main point, the reason has to do with correlation. The fact that the insurance industry is not simply in a clear way correlated to other asset classes, and that's what makes it so interesting, and that's what we somehow that's what we're up against.
Thank you, Peter. Hadi?
I'd like to react on the techno aspect. Techno, I mean, is indeed a way to, at a time where probably our business models are under stress and the industry is under stress, to respond and to that stress, in the sense that we are all seeing, and you mentioned, Peter, that there are investment now in InsurTech. There are investment why? The business model are now changing. Reinsurers, they affirm that they have an insurance activity to an extent in certain, I mean, areas, certain mature economies, on large corporate risks, on maybe certain other segments. And the idea behind that is what? The frictional cost, when you issue a premium, a risk premium of 100 in certain territories, that premium to reach its ultimate destination, probably you have frictional costs that can be as much as 40, 50%. So you have people that are willing to disrupt the market, the industry, and to shortcut that model and offer something that is cheaper. This is very valid. In our proper industry, techno is becoming also very important. When we see, for instance, for commoditized products, at your hand this year, there's going to be a blockchain platform, B3I, that's going to start testing CAT quotes that are totally automated with 15 participants, including, I mean, many reinsurers, us also. So that's, I mean, that's a big change. So for, this is, I mean, the world is evolving, it is disrupting. Yeah.
Thank you, Salvatore.
Just to answer this, I'm not saying that the world is not changing, but I say we need also to focus on what is happening today and to invest in the future. That's my message. And I think, you know, at the end of the day, the change will happen anyway, and we are the driver. But the reality is as well that we need to, let's say, to look then afterwards to the future and to say this technology will work and will be accepted by the client. It needs time. You were saying, you know, it didn't change from one day to the other. One lesson that I learned in my industry or during my career is the fact that whatever we do in insurance today, we will see it in 3 years' time, 4 years' time in your balance sheet. It is never, you know, that today happens the loss and tomorrow then afterwards there is a consequence. Unfortunately, our industry does not work like that. You need time to see the changes. And what you have seen now in 2017, and if 2018 is not going to be as good as, you know, investor would expect, there is no correlation. At the end of the day, it's about return on my equity. And it's like, you know, like yourself, I always say, apply common sense. If you invest in a share, in a company, the first year you're convinced that's the right one. You know, then the results are, let's say, not exactly that what you expect. Then you say, oh no, I believe in this company, let's go for it. The second year, you start to say, hey, these guys, they told me a story which has not been proved. After the second year, you start to say, hey, sorry guys, I'm probably not going to, you know, put the same capital on the table. I reduce it a little bit. On the third year, if you get again a loss, you say, you know what, I don't believe your story anymore, and I will leave. Now, said that, one thing is true. Technology will change our world over the next 10, 15 years in different regions with a different speed. But on the other hand, of course, we will never ever have the same market as we had in the past. That's passé, that's it. We need to compete, we need to learn to compete also with other areas. And one last point, yes, there is a difficult market, it is terrible, but we still are privileged compared with many, many other industries. We are still relatively high returns compared with other industries.
Salvatore, thank you. Come up.
Yes, maybe just a quick comment on this subject. I tend to be a bit pro technology because I've worked in the industry a bit. I remember back in the late 90s during the tech bubble, where internet was kind of launching. I used to be a system engineer working on different areas, and I do agree that there is a euphoria when people start talking about technology and the way they look at it, and it's going to change the world, and things are going to happen so fast. And I think that was what crashed the technology sector back in the early 2000s, mainly because of this, because of the internet bubble. I think people have always had, when talking about technology, is they're looking at it as a disruptive tool that is coming, or a disruptive area that is coming into any segment or any sector. I think what we need to look, when we look at technology, we have to look at it as an enabler. How do we look at technology in a way to enable the way we do our business, or the way to penetrate new markets or new segments, or allow a product to survive on the long term? I think this is how technology should be looked at. We all believe it does disrupt. It disrupts how we do things today. People are always worried about change. But at the end of the day, the cycle has always told us, if you don't get on the wagon, you're going to be left behind. And unfortunately, even when we look at capital, what Peter alluded to here is, why is this capital keeps on coming? Because R&D has itself changed massively in recent years, in the past 10 years. The amount of data that we are able to collect, these financial institutions' alternative capital has become what I call smart money. It's not speculated money. It is smart money that looks at our industry in a very approachable way, knowing enough data on what they believe the future is going to look like, as you have mentioned as well, that they invest today, they're looking at the return, maybe not in the first year or second year of the cycle, but they do see change. They see it, they look at it, and they believe that, yes, they are looking for a lot. I think when they came in prior to 2017, they've expected a 2017 event. They very much have expected it, and hence in 2018 they re-injected some of that capital back in, and they will remain to inject it. Because even financial instruments and the way they protect their capital these days has become very smart. It's completely different to what happened back in the 1990s.
But if I ask one question to all participants here, in your company, how much of your premium income and profit is related to new technology?
Currently, I wouldn't say much. As a reinsurer, definitely technology is not going to be a big enabler at this stage. We come later in the cycle. But for the direct insurer, and I think AXA is one of them, and Zurich and Allianz.
I have the number because you talk with them. How much do you think is new? How much, if you take now one prominent laminate, how much premium are they generating with a market value of 1.2 billion?
Yeah. I think lemonade is, they're growing, but I think they're struggling.
So how much?
Because of the culture.
Come with the numbers, because that's
in terms of what? In terms of global premium.
Yeah.
Perhaps I can interject.
Relative, very small. It's tiny percentage.
20 million US dollars.
Tiny percentage, yes.
20 million US dollars. That's all. In Zurich.
Salvatore.
As a chairman, I have to hold on. We are running out of time, so I would have to. Hold on. I give you a chance. I have to say that yes, I'm sure there are validity in these questions, and the fact that how much money does technology bring into the industry. And clearly, I think that has to be bifurcated into the various sectors. Personal lines, commercial, industrial, and these will have different nuances into the premium volume. So to answer it very directly, I think it's a difficult one. We're still in a developing phase of technology and embracing technology and bringing it into the system. So, I mean, yes, you have a point, how much, but the question is that, if Nokia thought about only phones at that time, and that's what they thought, they lost the future. And other technologies embraced it, and Nokia, I don't know if anybody uses Nokia anymore, just sorry to say. So the future is in the technology, we just need to know how to embrace it and take it forward. The reason I interjected is that we are running out of time and there are some more maybe pressing subjects, but Eddie, I give you a few seconds to say what you have to say, then we can continue. Thank you.
Just, I wanted to make one comment. It is true that premium in reinsurance directly related to techno are not today, meaningful. But indirectly they are meaningful. For instance, let's take just one example, Italy. The Italian market, 40% of the insured cars are equipped with telematics. So at the end, the premium even you receive in reinsurance that is related to that is somehow part of it is directly collected to techno. If you take another example, UK direct sales, by phone or web, they represent half almost of the premium produced in the market on the motor. So there are markets that are moving, there are changes, this is happening, this is not happening everywhere, this is going to come. I think another element we haven't said, one example in Kenya, microinsurance goes a lot with also techno. In Kenya, the farmers, they have their livestock insured via a pool. The pool, the insurer that has won that pool is having an application that is on mobile phone where you can pay your premium, you can also receive your claims, everything is totally automated. So techno is changing. Techno is really changing, and this is happening. This is happening today in certain areas that are very specific, but this is happening. Obviously, this is not the main bulk of what we do today, but this may become the bulk, and in that I totally agree with what Salvatore said. In 15 years, this is, a long-term movement, but this is a movement you need to prepare now. It's not in 10 years that you should start.
Thank you, Eddie. I think I have just 3 questions that I would just pose, and then we can open them up. Kamal, in your subject on microinsurance, you mentioned a very important word. You said in terms of economic levels, the bottom end of the pyramid, ... Since we're in Egypt, and I thought about it whilst you were talking, the pyramids are, the foundation of the pyramids at the bottom end. They're very strong. What are we saying is that the lower levels of the economic cake, that's the importance. That is where the LSM1s, which we call them. And in terms of microinsurance, we are, as an industry, are not servicing that part of the community. I think we have a duty to do that, and the questions that you raise are quite relevant. Government intervention to support that, technology, and distribution. It's a lot to do, but I said Khalid has talked about technology. Is there a way in which we could bring these parties together so that we supercharge the development in microinsurance? I'm aware that in Egypt there's a lot of development happening, but I'm not convinced that we're doing enough to solidify what you call the bottom end of the pyramid.
Yeah, just to answer, I think Egypt is not much different from any. Let's focus a bit more on the MENA region, and I tend to be a bit more straight when I talk about these things. Is we do have a lot of gatherings, we have a lot of conferences, we have a lot of meetings. We tend to talk a lot, but we do little than what we should be doing. We look at insurance associations in every country. It's a gathering of individuals. I'm not sure at the end of the day whether there's a direct communication with the government and the regulator and trying to really establish a triangle or a real kind of a plan adopted by the government. I mean, does these challenges are brought up to a political level or at a governmental level where it's being discussed that really the insurance and reinsurance industry can bring a lot of solutions to the economic issues that governments are struggling with in this region. And it's, as long as it's being adopted, there's a lot of, we look at Egypt, for example, in excess of 90 million people population, and I'm sure, there's a lot to do. to safeguard a lot of the Egyptian industries. When we look at agriculture, we look at farming, we look at medical insurance, etc. But not a single insurance company in Egypt will be able to do it on its own. And people, I think the insurance companies need to get together more and more and push the regulators and push the governments to actually adopt the industry like we see in the West, where insurance is an enabler of driving economic value, which unfortunately in our region here in the MENA region, we are not at this level. We're way behind the curve of where the insurance and reinsurance industry is a real economic enabler and adding value and limiting damages because of whatever cat or economic needs. That's my feedback on that.
One point which I think it's important when you talk about microinsurance is the fact that, when we talk about changes, also the insurance world is changing in that respect that we should not think only about insurers who are taking risk. We need to change as well insurance company offering services. When you talk about now people, 60% in Africa has an income below $2 per day. They are not going to, the first thing is not to think about insurance. So our job must be to find sponsors who are trying to keep them as loyal clients, to bring them on board, but to pay them afterwards the insurance to cover for some, let's say, important aspects for their life. That's the only way how we can make sure that those people are becoming future clients in insurance. They are not going to be from themselves to pay for insurance. We need to find somebody else who are paying for them. And that's, one way is loyalty programs, for example.
Thank you, Salvatore. Changing track a little bit, Khalid, a question that I posed earlier perhaps. Do you think that technology is a threat to traditional brokers going forward?
Actually, the answer to this question depends on how do you react to the changes in technology. If you fail to react, definitely it is a threat. But if you succeed to react, definitely it is an opportunity. Advanced technology means cost-effective operation. This is an opportunity. It means easier access to your client on a massive scale. This is an opportunity. There is a big room to establish different numbers of platforms. As I previously said, like something like insurance management platform. On this platform, you provide a lot of variety to your client, tailor-made solution, users-based solution. Personalized insurance, you can provide this across this kind of platform. Here I would mention something like Booking.com or Amazon, for example. They don't provide the service themselves. They are intermediary at the end, but they have been successful to reach almost the whole world is dealing with them. But unfortunately, we as the insurance industry, we are lacking behind this kind of mass access to our clients. Peer-to-peer platforms, for example, you can even manage as a broker, you can manage a mutual for a number of insured. This will be for a small risk, maybe for small claims, but you can transfer the risk to an insurance company, giving some contribution in premium, because the small people or the individuals, they cannot sustain large losses. So it will be a kind of collaboration between carriers and brokers as well. Of course, we have on-demand insurance. It's now available through the Internet of Things. And also, as I said before, you need really to add a lot of value-added services. Maybe it may come in the form of risk improvement advices, risk control. There are a lot of areas actually where the broker can add values to his client.
Thank you, Khalid. Before we open the conversation to questions from our audience, I think we will finalize with one question, and that's the elephant in the room, And Hadi, over to you. I don't have to answer this. What does your cedents expect at the 1st of January renewals?
This is a difficult one because I think this is a question for the cedents. The ones I met and who expressed something, they expressed specific needs to be accompanied on certain new developments they're having, whether in terms of products or in terms of services. And this is also, I mean, something that is quite important. If your question relates to price, and I guess that's the case, probably their expectation, yes, is maybe, I mean, reading what they have read on the excess supply, maybe they have some expectation, but those expectations, I'm not sure they're going to be well satisfied also, because on the reinsurance side, as I said before, we are really under pressure. One thing I may add to that is the fact also that, for instance, if you take an event of 25 billion, 10 years ago, an event of 25 million, the payback was 7-8 months. An event of 25 billion today, the payback is 2 years. That's a lot, so it means that profitability can't be dented. This year we had also some events recently that have put some pressure also on earnings. Okay, not on capital. Capital is still there, so supply is still very strong, but the profitability of that supply, this is the key question. And to which extent suppliers are prepared to compromise on the price, I would say not that much, if maybe not at all.
Thank you, Eddie. Okay. I think we've had a fairly interactive discussion this morning, and thank you for your participation as my fellow panelists. We'll now open it to the floor and seek some questions that you want us to answer. Thank you.
Good morning. محمد مهران from Allianz Egypt. Thank you very much. I think it's a very informative discussion. I believe every point raised needs almost a complete panel to discuss it, and maybe it will be less. But I will start with the questions. I have actually many, but I will take only one for the benefit of time, and I will address it to my friend Peter. The question will be, is the international business is a legal child of the globalization? And what we are seeing nowadays is the demise of the globalization, better to say. So there is a problem between US, or at least let us say, trade war between US and China. There is also an increase of the protectionism going from country to country. And there is also speaking about localization versus globalization. So the question, since we are speaking here, what do you see about the future and how the international business would be?
Thank you, Mohammed. That's a great question. I think, yes, you're right. Turbulent times, and if just with respect of international programs and the needs of our clients, I think first and foremost you need to have a system and an organization in place who can cope and monitor these changes, right? So regulatory changes obviously needs to be monitored constantly, and we need to react to them when needed. So if you ask me about the increased level of protectionism, that could be, for instance, an increased need of having sort of local policy issued, right? And that will mean that any given international program might have an increasing number of local pillar policies attached to it. Now it comes to us, the challenge for us as insurers is obviously how we administer these programs, how we measure them, and how we make sure that the same services is provided to our clients. So I think it has changed in that regard, and that would be my answer to your question.
Thank you, Peter. Do we have any further questions? Hello?
Thank you very much. With other comment, actually, I like the fact that Salvador challenged the whole panel on the technology issue, and I think he has a point that it will happen, but it needs some preparation. It will take some time. My question goes to Hadi. You mentioned that there have been a deterioration on the return equity during the last 7 years. And if you'd like to, I'd like you to give us who is the reason for this? Is it the cedent companies, the reinsurer, the reinsurance brokers, the client? If you'd like to put them in, who is number 1, number 2, number 3, number 4?
This one is even more difficult than the previous one. So I don't know how many friends I'm going to have after this one. So Ali, thank you very much for asking this question. I don't know, the market is always right. At the end, if we do certain things that we should not be doing, we are the only one to be responsible. So if we give cheap prices and we end up in trouble, we are the ones to be responsible. It's not because someone asks you something that you should do it. So that's my response.
But I think one point that is the reason why we have this type of situation is the reality that we are not growing as a worldwide economy. So markets are not giving the possibility to invest and afterwards all the capital that in the meantime has been prepared to be deployed. And that means automatic overcapacity, and that is then after the consequences that the pricing are coming down. It's not a responsibility of one, it's the whole value chain which is of course becoming more sophisticated because everybody sees of course what can be done, wants to make it as well, and automatically of course the market is not growing, is becoming smaller and smaller. If you think that in reinsurance the cession rate in 2001 of the ceding company on a worldwide basis was 13%. Now the cession rate is 5.7%. So companies have sophisticated the way to buy reinsurance as such, which has a consequence at the end of the day.
Thank you very much, Peter. I think with that, we will bring this session to a conclusion. It behoves me to thank our panelists, Peter, Kamal, Salvatore, Khaled, and Hadi. I really found this very interesting, and I hope our audience found it equally interesting. I'm sure we haven't answered all the questions, but certainly on the sidelines of this conference, you can certainly challenge the participants and take it to the next step. My only final conclusion is I found it very interesting, and all we are looking for at the end of the day as an industry would be volume is vanity, profit is sanity. And let's have that as what we should be doing. Thank you very much for your attention.
So we start with the moderator, Mr. Muhammad. Shukran. Mr. Hadi Hashisha. Mr. Kamal Tabaja, who definitely doesn't need a microphone. I agree with that. Great voice. Mr. Peter England. Mr. Salvatore Orlando. And Mr. Khaled Al-Sayed. Thank you very much for the valuable information you provided during the session. And the next session also will be extremely interesting on the challenges that we must face in the insurance industry. We now break for networking, coffee break. It's going to be a short one, half an hour, sponsored by Arab Insurance Group, GIG. We will start the second session immediately afterwards, and I'd like you to be here on time to get to catch all the ideas that will be presented during the session. Thank you very much, and see you soon.